All right, well, for today's market movements, Adam Dawes from Shaw and Partners joins us now. Adam, great to talk to you. Now, you're going to give us some stock picks, but just before we get there, interested to see, obviously, we're pushing towards record highs, all-time record highs for the local market. What's your reader of where we're at the moment?
Well, it was a fantastic day yesterday, guys, wasn't it? And we're a little bit dumbfounded why our market continued to go higher, even when the Dow futures and the Nasdaq futures were trending lower. So I think we're going to potentially play a little bit of catch up to the downside today on the back of obviously what's happened overseas. So look, but you know, it might be a flip side to that. It might actually be a strong day with iron ore going to near, well, all-time record highs, and that means our miners are going to do very, very well today. So BHP, Rio and Fortescue will probably prop up the market a lot, as potentially that iron ore price is looking like it might stay higher for longer. So that's a politician's answer of saying, I really don't know what is going to happen today.
Yeah, I mean, you're certainly right with those commodity prices. Quite unbelievable, isn't it? Because iron ore was at close to $230 a ton. So,
yeah.
And we saw we saw the prices, particularly what Fortescue ended up over close to 8% higher, didn't it?
Yeah, I think you just got to be a little bit cautious, because what China's doing is trying to curb steel production internally, and what's happening from there is that then the steel makers are ramping up production to try and make sure that they're basically not going to be hurt if steel production does get curbed. Plus also they like our iron ore, so the iron ore being a higher grade iron ore, BHP and Rio, that higher iron ore grade means that they can blast their furnaces at a hotter level, which means they can make more steel. So that's the first thing to be concerned. But then the second thing is that this is not going to last forever, because we know China is putting a lot of money into West Africa. We know that they're putting a lot of money into Indonesia and in those areas, because iron ore is a vast resource. It is all around the world. So I think in the next 5-8 years, China is going to be stopped to be so dependent on Australia on iron ore. And that's something that you need to be, as an investor, be aware that those kinds of things are going to take time, but potentially China isn't going to be reliant on us forever.
So Adam, at the meantime, it does seem though that inflationary pressures are here. With that in mind, where do you see value? Who's going to benefit the most when it comes to those individual stocks?
Well, inflation, yeah, look, certainly is a hot topic and will potentially continue on. One of the stocks that I like at the moment is Woolworths, and obviously food prices have continued to go higher. Are they able to pass that on to customers? I suspect they probably can. Or can they push back to the producers to say we're not going to charge? I think they can also. So they're in a relatively very, very good spot. But also Woolworths is demerging their Endeavour business, which is their Dan Murphy's, and their ALH, which is the Australian Leisure and Hospitality business, which is one of their, I think there's about 2,000 pubs and clubs around Australia with some gambling and obviously alcohol assets. Now that was slated to happen last year. It is going to happen this year now in June, and I think this is going to be a fantastic opportunity for shareholders of Woolworths to get another stock in their portfolio. So if you hold one Woolworths share, you'll get one of the demerged Endeavour Group. Now that is fantastic, because we know from previous examples, the parent being Woolworths and the child being Endeavour Group, the child will outperform the parent over the first year. So it's really a great opportunity. It's a really good buying opportunity in Woolworths now to get set into Woolworths to take advantage of that demerger of what is a very good business, being Dan Murphy's and the hospitality sector.
Yeah, that's interesting. You think it has more upside than its rival Coles at this point? Because obviously Coles still has to catch up at this point.
Yeah, so like-for-like sales, as we know, have started to come off, and we saw Woolworths come out the other day and basically say, look, we're not going to get 12% like-for-like sales, it's going to be more like 4 or 5%, and that's sort of normally where it should trade. I think Woolworths is in the box seat at the moment. They certainly have done very well on a lot of marketing and a lot of other issues going forward. But really, for this trade that I'm sort of talking about, or at least buying Woolworths, I like it for that demerger side of things, and I think that's a real kicker for the business.
All right, fair enough. Adam, that's your blue chip buy, Woolworths. Let's go to the mid cap then. And Aussie Broadband. What are you liking about this?
Yeah, look, Aussie Broadband. We've got a buy on the stock, and we've got a price target of $3.33, and I own some shares in it, so I have to be careful what I say. But I think that Aussie Broadband is creating a potential growth catalyst, and I think what Aussie Broadband's initiative is to allow other retail brands to sell its services under their own name and create potential growth catalysts. And this is something that people have done before, but margins have always been a little bit of an issue. So we need to be careful on those margins from its initial partnership. But I think those contributions to those margins will be in line with the core expectations of the business and progress these through going forward. So I think this is a great growth technology space. We all know that the big boy in the room, Telstra, has started to potentially get a little bit of a catalyst going forward, but it's hard for Telstra to get the growth. Where these mid-cap telcos, they can get the growth. They're able then to get that growth moving forward, and they can take market share off the big guys. So I really like Aussie Broadband. They've got a fantastic reputation in the market. The stock has come off from sort of $3.10 down to $2.88, somewhere around there. So I think there is potential there to pick some more up at a good discounted price. And I just really like the story. I think it's got a long way to go.
Yeah, we had a chat with the CEO, and he said that their competitive advantage was that they could offer direct service to their customers, and that was very much their focus. Do you agree with him where they sit in that competitive space?
Yeah, and I think if you look at the survey from some of their customers, and look, we all like to bash the telcos and the banks, at the barbecues and things like that, and especially Telstra is a fantastic one to sort of talk about. But look, Aussie Broadband from their customers have just, I don't know how they do it, but it is constantly, people are very happy and satisfied with their business and satisfied with what they do and the customer service. So, we all know you can spend sort of 20 minutes on hold with any telco business, and it's tough to get good customer feedback. But this is certainly one that I think is very, very good, and they've got a really good following through their customers. So, job half done on that one.
All right, Adam, let's go to your speculative buy. Go out on a limb here. Amaero International. It's a metalworking using lasers, essentially 3D printing, is it not?
Yeah, very much so. Yeah, 3D printing. So, look, this one's come off about 22% over the last 4 or 5 days. Like, it's just been really hit pretty hard. So, down to sort of 47 cents. I think this one's a really interesting one because in the last quarterly, they came out and said that they've had some really amazing contracts with some really good businesses. So, one is Nissan. They've come out and said that they've got some casting and they're doing some tools for the motor vehicles, Nissan. Raytheon, which is the intelligence and their space division. That's a very large contract in the US. That has gone through as well. And they've collaborated with Rio Tinto on developing the supply chain for some of their high-performance operating aluminium alloy businesses as well. So, look, some fantastic contract wins. They did do an SPP or subscribe for shareholders to subscribe. That was at 55 cents. Currently, the stock's at 47 cents. So look, I think that is obviously a very benefit to shareholders. That they're obviously getting in at a lower price, but also they've got 12.6 million cash in the bank at the moment as well. So look, money in the bank, good technology, and some good partnerships. I think it's been oversold down here. Yes, it's speculative. Yes, it is high risk. But something that I think that is well worth looking at and revisiting that at these levels. And
what's liquidity like, Adam? Given that it is a specky stock.
It is actually quite good liquidity. Like you can move in and out of this thing pretty easily. So it's not a lobster pot, what we call in the industry. It's easy to get in but hard to get out. This one does have a fair bit of liquidity, so I'm comfortable to recommend it to clients.
Adam, great to check in with you this morning. That was a buy on Woolworths, ABB and 3DA. Thanks so much for joining us from Shaw & Partners.